Well, hey there, everyone, and welcome to today's VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White, and I'm coming to you live from a beautiful day here in Austin, Texas, and I am going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics, and he's going to be focused on A-plus trades specifically when looking at swing trade opportunities. And from that perspective, he's going to cover what makes up Roger's favorite swing trade setup, how to find the least choppy stock, elements that make up a smooth gliding stock, grinders and pullbacks when looking for a breakout, how to add the right option to the mix. And then as a special bonus, folks, we're going to open up everything live and we're going to see if we can identify some great setups in the market right now. Now, if you've got any questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat will be open to everyone. And so remember, we have some ground rules in place. Number one, always be kind. Number two, keep to the topic. Number three, no political discussions ever. And finally, remember that we are a 100% supportive trading community, and we're here to help each other to become more confident and consistent in our trading activities. Now, for those of you that were with us this morning at 8 o'clock for Roger's pre-market show, here are some of the comments that he shared with us. Now, before the jobs report came out, Roger kind of pointed to the fact that the market was pretty flat. Consumer discretionary and telecom sectors were the leading sectors, and in both cases, he felt they were significantly overbought and that was a warning sign. He also noted that there was market divergence in place as the Dow was down and the NASDAQ was up. But after the jobs report came out and it was significantly worse than expected, the bonds took off and the indexes did in fact rally. The jobs report, on the one hand, is a bad signal for the economy. But as far as the markets are concerned, it all but assured that we're going to see a rate cut in September, and the markets were responding accordingly. Now, from his perspective, things to keep an eye on today. Watch the bonds as they approach the 200-day EMA. Look to see if it's going to break above that level or if it's going to bounce off that and move forward. Also, he suggested keeping a pretty close eye on the QQQ and the SMH to get a full picture of what's going on in the market after the market opens, because between the bonds, the QQQ, and the SMH, he felt it was going to tell us everything that we needed to know about market sentiment. He also advised everyone to be very, very careful when considering shorting stocks at this point, given the fact that the SPY and the market in general were either at or approaching all-time highs. You know, Roger, when the broader market is moving higher, he's very loath to consider any short opportunities. Now, as far as the catalysts for today are concerned, and I think we all know what a catalyst is, that's information that is known, that is significant, and the market hasn't priced that in yet. So today's catalyst would be Fed data. And the jobs report came out with 22,000 new jobs added versus a consensus of 77,000. And that's a significantly weak number. As we indicated, bad for the economy, good for interest rates, and as a result, good for the stock market. He also looking at the chip sector, where Avgo is up about 8% coming into the open. Consumer discretionaries, he was looking at Lulu, which was down about 10% coming to the open. And he also noted Japan, with the Nikkei being up on a deal that would reduce tariffs to a flat 15%, which would have a broad impact on a number of products and services that they export to the United States. Now, as far as Roger's small cap watch list is concerned, let me go ahead and share with you the 4 stocks that he identified, and I'm putting those in the chat panel right now so you can see those. Now, he was looking at Hour above 388, VEEE above 340, PRSO above 170, and ISPO above 6. He also shared with us that the key to these selection was price action and volume. So that's what, comes to Roger's attention. He also warned people that, look, small caps are not market dependent because major institutions aren't putting money into small caps. It's retail investors like ourselves. And he also shared that we should be careful when looking to trade these levels, in particularly if we're approaching 2 p.m. Eastern time. Because if we haven't seen the move by then, it's likely not going to happen and we should move on. And as a matter of fact, let me look at something pretty quickly here. I believe that of the things that were suggested, I was trying to figure out, I guess it was HOUR did extremely well because the level was 388 and it actually went up to almost $5. Actually, yeah, $5.42. So for those of you that may have taken that trade, you definitely made some money on that. Now, as far as his daily stock list is concerned, here is what he had. There were some shorts and some longs. And let me go ahead and copy and put those in the chat panel for you all to see. And once again, the caveat to all this was be careful about the shorts when you consider, once again, that the markets, at least pre-market, we're looking at all-time highs or near all-time highs. But this is a pretty good selection. And for those of you that know how Roger works it, he calls up each one of these signals. He brings up the chart. We can see clearly what's going on. And he advises us all that if we're going to look at taking a short or one of these longs, just make sure that if I'm looking at a short, that we've got a clear breakdown signal. And if we're looking at a long, we've got a significant break up signal. And today he's going to be talking about how to identify some of that. No, he talks about a gliding market versus a choppy market. He's going to be doing a deep dive into that during today's session. And to that point, let me just refresh for everyone what Roger's going to be covering. Number one, he's going to share what makes up his favorite swing trade, okay? He's going to tell us how to find the least choppy stock, okay? He's going to share with us the elements that make up a smooth gliding stock, which is what we're all looking for. He's going to talk about grinders and pullbacks when looking for a breakout, adding the right option to the mix and identifying. And once again, if we've got some time, he is going to open up and he's going to share the best setups that he sees in the market right now. And with that, folks, let's say hi to Roger. Let's say hi to Matt. Guys, it's great to see you today. I hope everything's going well. Interesting this morning, Roger. I know when we were looking at the markets that man, before the jobs report came out, things were just kind of stagnant. And maybe that's because people were waiting on the jobs report. And then the jobs report came out and it was bad. As you said, bad for the economy, but great for stocks because the bonds were moving higher. And in your opinion, it really more than guarantees we're going to see a rate cut of some kind occurring in September. And that was good for stocks. It was just lifting everything. So once again, that's where we are. So Roger's here, and he'll be coming on camera in just a minute. Folks, we've got a wonderful session all set up for you today. Roger's going to be talking an awful lot about swing trading, what makes up an ideal swing trade. He's going to talk about that smooth glide that you look for, how to stay away from choppy stocks. Roger, this is what's on everybody's mind. This is top of mind for everybody.
Of
And
course.
so it's a great session. Hey, listen, I always like to start by asking you this question, Roger, from this morning to where we are today. Any surprises from your standpoint?
Yeah, actually, I'm pretty surprised that I'm pretty surprised that the market sold off as hard as it did after the opening.
Yes.
I am. I'm a little surprised because, and I'll tell you why, because if you look here, let me share my screen real quick. Here. Because you will see right here, if you look at market internals, the ADD is still positive, and the volt's not really breaking down or anything like that. It's coming right back up. So I'm not really seeing anything. Bonds are making swing highs they're not going down. They're breaking higher right now.
Right.
So I'm really not seeing a lot of reason for this. Now, with that said, I just want to point this out to everybody. We clipped the 8-day moving average, but we didn't break below it. I mean, we just clipped it and went right back up. You're welcome, Greg. You're welcome. That's good feedback. Thank you. So we're still in a very bullish cycle. We're still in a very bullish period right now. So to me, this is just Friday gyrations. But I am a little bit surprised at this because I didn't think the market had it in it to do this. I thought the market was just going to slide down, cool off a little bit, maybe come down here. And I wouldn't be surprised if by the end of the day we ended up being right above the VWAP or like right here, or
Okay.
just consolidated the rest of the day because it's
Right.
Friday. The report, it was an interesting report because the report was not a good report. It was a bad report. It was a straight up bad report. It was a really bad report. But what happened after last bad report? Does anybody remember?
Outside of somebody being fired.
Yeah, with again, and I'm okay with people being fired. Look, I
Yeah,
don't have a
I didn't even want to go. I'm sorry I said
no,
that.
no, no. It's all good. And again, this whole thing about fake news, people getting fired. Let me explain to you guys my view on all of this. Okay, and this is not political. Until you have proof, and someone saying it's I don't like the data, it's off, is not proof. Until I see proof that it's off, it ain't off. Okay, just because someone says something, it doesn't mean it's bad. It doesn't mean it's bad.
Right.
Okay, doesn't mean it's bad. It simply means let's see what let's see what it leads to.
Hmm.
One of the things about me, I hate politics. I'm really objective and I like numbers. And if somebody can show me a number, I'll buy it.
Hmm.
But I'm not seeing any numbers. So again, please don't say, well, Roger, no, 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 no. It's called critical thinking. Show me the numbers, show me the data,
Right.
and then I'll believe all that stuff. So I'm not saying it's not real, it's real. As far as I'm concerned, everything is working exactly how it's been working for the last 50 years. And here's the other thing, folks. Let's just for argument's sake, and this is actually what I wanted to say. Let's say for argument's sake right now, let's just say for argument's sake that it is fake. It's fake news. It's bad. Data's bad. Okay, okay. What do you think every hedge fund in the world is basing their decisions on right now? That fake data.
Hmm.
So until proven otherwise, everybody's going to be looking at that data, whether you think it's fake or it's not fake. And my suggestion is till you see a proof of something, just don't believe just because someone says something. It doesn't mean anything. Proof, evidence, proof, the things people need to see. That's all I'm saying. And again, all I'm saying is let's see what the numbers are, and then we'll see. But the numbers as they're coming out right now are telling us employment is really, really, really bad. Here's the irony. Here's the part that I don't understand. Our president wants us to cut interest rate, wants the Fed to cut interest rates. If the Fed is to cut interest rates, it's because unemployment is low and it's weak. So if the president is saying it's fake news, then why do we need to lower interest rates? Again, I don't understand that logic. So maybe somebody can explain it to me because that doesn't make any sense. You can't have it both ways. So it's either fake news and the market's doing really great, right? If it's fake news, or it's real news and the market is not doing well. But you don't need to lower rates if the market's doing well and if it's fake news. That's all I'm trying to say. Doesn't that make sense, Raleigh?
Yeah,
You
absolutely. It
can't have it,
does.
and this is not a political discussion. This is
No.
this is a financial discussion.
Right.
If let's just say the employment data is wrong, okay? Well, then the implication is that the employment is fine. Well, if employment's fine, then what the hell does Powell need to
Hmm.
lower rates for?
Right.
And if the data is correct, and I think it is correct, and employment is going down the hill, then the Fed does need to take action. But again, it can't be fake and the Fed needs to lower rates. You can't sit on both of those chairs with one. It's got to be one or the other. Okay.
One or the
So
other, exactly.
yeah, you got to have one or the other. So and again, don't put me into this whole. I'm just pointing out the different arguments, and whatever side you're on, God bless. I couldn't care less. So that's the first thing I wanted to talk about. So again, I don't know what to make of it, but until somebody shows me with evidence that it's fake, I'm going to assume that it's real, and I'm going to be using that data You know why? Because every institution is going to be using that data. So remember, our job is not whether it's real or fake. We don't use the 50-day moving average or the 200-day moving average because it's a good indicator. We use it because everybody else is using it. Remember that.
Yes.
Okay. So all of these things just wanted to kind of I just wanted to kind of, pull this around. Now, before
Exactly.
we start, and I'm not on a time clock today, so I have a little time. Matt, would you do me a favor and would you explain everybody your decision to take those three trades yesterday and the trade you did today against the Volt? Can you explain to folks why you did those trades? Are you there? Yeah. Yeah, I'll come back to you in a second. No problem. Yeah, I'll come. Oh, you went long again. Okay, okay, all right. All right, well, whatever. So yeah, I'll come back to you in a few seconds. But do me a favor before we leave, because a lot of people wanted to hear it from your mouth. So I wanted you to explain it to them line by line. Okay, so let's talk about my favorite setup.
Absolutely.
Folks, I'm going to tell you today was a really good example of you guys. I'm not saying you guys. I'm talking about market participants, getting a lot of FOMO to the downside and then back to the upside. You had folks today that were buying the market at the open, getting really excited. Then you got people getting scared and shorting the market as we were coming down right here to the 8-day EMA, right there, which is a big mistake. And now people are like, I lost money on my short and I don't know what to do with our longs. And you know what we've done this morning? Nothing. We haven't done any, except Matt took a SPY trade. We did nothing. Absolutely nothing. I put on a trade in the pit, but I did it after this whole thing passed. I did it like 20 minutes ago. So my point is, don't. This price action is designed to confuse you and to take advantage of you and to manipulate you. Market makers know exactly what you guys are doing. Okay. All right. Now, what about these stocks? Let me Let me just get this off here. What about these stocks that I like? Let's talk about them. Okay. Let's talk about these stocks that I'm liking a lot. Okay. What do they all have in common? Well, let me pull up my TC 2000 here real quick. Okay. So take a look at a stock like this. Okay. And take a look at a stock like this. Okay. Now here's another one, First Solar. Let's take a look at First Solar. Okay. Let's take a look at Qualcomm. Let's take a look at this stock. Does anybody see the difference between all those stocks and this stock right here? Especially this period right here. This period right here. This period right here. Look at how it glides, how smooth the stock price action is.
Yeah.
Okay. It's very smooth. It glides. It doesn't have overlap. That's right. It's not overextended from the 8-day EMA. Okay. It's a nice looking stock. Now, take a look at a stock like this. It's everywhere, right? It's all over the place. It's all over the place. What you guys should be doing every time you're trading, you're looking at stocks, the first thing you should do is ask yourself, does the stock look like this? Or that's not a bad look. That's not a bad look either. It's a little jaggedy, but it's not a bad look. It just comes up, grides it. Or does the stock look like that? So what you should do is this, and I really mean you should do this. Let me just get my list out real quick. Let me get my list. Okay, here's my list. So I'm going to go through my watch list right now with you guys, okay? And let's see if we could. So here's what I want you guys to do, okay? I want you to look at the following qualities, okay? And let me tell you what those qualities are. I want you to look at how choppy the stock is. You may want to write this down, okay? You want to see how gappy a stock is, okay? You want to see how overextended a stock is, okay? You want to see the degree of slope in that stock. You want to see if stock is a grinder or breaking out, okay? So here's what I'm going to do. I am going to post this here for you, okay? I'm going to post it for you. And I'm going to post it for you guys in, hold on one second. Let me get to the right YouTube channel. Okay. Too many monitors. Too many monitors. There you go. I'm going to post it for you guys on YouTube as well. Yeah, Julian, that's my point, Julian, that if Trump should be happy if the employment is bad because it'll make it easier for him to get what he wants. But again, what do I know? So not get least choppiest stocks, no gap stocks, not overextended, degree of slope, grinders or pull or breakouts, pullback or breakout. 45 could be, I would say that's a little too ambitious, Tim, maybe for a grinder, but not for typical stocks. So let's do this. Let's do this. Let's just go through every one of them, and you guys could use this as your guide, and we could see the qualities that each one is missing or what they are missing, okay? Second here. Okay. I have a stock that I'm looking at that we went long, and I want to just keep an eye on it. Stock was 1 second. I'm trying to multitask here. Usually it works out okay.
Yeah.
Usually it works out okay. Usually it works out okay. All right, let's continue. Sorry about that, folks. So let's go through them one by one. We only care about the daily. We don't care about the intraday. We don't care about the intraday. We don't care about Hakinashis right now. We don't really even care about volume. We just want to look at the daily, okay? So here's my list. Here is my list. Okay, I'm going to start with the shorts. Steve says I'm excited. All right, Steve. All right.
Buckle up.
Okay, let's grade this stock. Okay. So, like law school, you don't have to regurgitate all the rules. You just have to tell me the problem. Where's the problem here? Where's the problem? We could find it right away. Anybody want to tell me? I mean, you could see it immediately upon. Can you see it? The problem here? Overextended. It's overextended from the 8-day.
Mm-hmm.
It's overextended. It's not gappy at all. It's beautiful. It's a great pattern. It's overextended. Look where the 8-day EMA is. Look where this is. Too much. Overextended. Folks, all you have to do, it's not gappy. Gappy's here. This is gappy. What was that stock? NVO. This is gappy. This is gappy. Okay? This is gappy. This is not gappy. This is overextended. It's a big difference. Understand the difference between gappy and overextended. Yeah. Yeah. As a matter of fact, just to show you, just to give you a good analogy, in case you guys want to do this yourself. Oh, too many. This is killing me. Too many monitors. Okay, here, look. Let me show you. This is the 8-day line right here. Look at how we broke the standard the ATR off of the 8-day EMA. We're completely away from it. This is the 8-day. This is the bar. You see how far away? There's no gaps here. So it's a great stock. There's nothing wrong with the stock except for one. There's no overlap. It's not wiki. It's overextended. Okay, let's continue. Let's be accurate in our assessment. Okay.
So, Roger, technically speaking, when it's overextended, your experience tells you that we're going to snap back.
Yes, unless the volume is really, really high, and I have a major and the S&P is breaking the 50-day or the 200-day moving average to the downside, and everything is moving like this, which it's not right now. So yes, the answer is yes. So there is an exception to that. We're not in that exception right now. The context is very different right now. The SPY's above the 8-day moving average. The VIX is low. The bonds are going down. I am not seeing any reason for a sell-off in the market right now, technically.
Mm-hmm.
Okay. No, I'm not looking at the 5-minute chart. I'm looking at the daily chart. Okay. So what about this stock? And again, we're going to be here forever, but let's just, what's the problem here real quick? I don't care about tariffs. I don't care about fundamentals. I only care about fundamentals from a very, very broad perspective. It's very wiki. What else? What else? What else? How about choppy as hell? How about choppy as hell? Chop, yeah. It's choppy. It's trending pretty well. It's got good rhythm to it. I mean, look, boom, 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 but it's choppy. Look how much overlap it has. Try to find the single biggest okay, folks, try to find the single biggest problem out of that list I gave you. Don't try to do many, just one problem. It's kind of wiki, but it's choppy. The problem here is chop, chop, chop. You get in wrong here, you get in on a breakdown here, and you're wrong. You're gonna be in a chop, chop, suey land, okay? Yeah, it's okay. This is an exercise. We're not penalizing anybody for getting anything wrong.
Right.
But I think this is a great way to do it. I think this is a great way, and we get a lot of people involved, and this actually teaches you something. So I love doing anything that can help teach. Okay, again, I'm not trying to trick you here. So don't. What's the problem here? It's not overextended. It's not choppy. I said don't worry about volume, but volume is not low. Volume is fine. That's fine. There's nothing wrong with this stock. No, it's not. It's not in range. I'm only asking about the quality of the move. I'm not asking if it's ready for a trade right now. The quality of the move. Candles are not small. There's nothing wrong with this. It's riding the 8-day EMA. There's nothing wrong with this. Nothing at all. I mean, here it's choppy, but here there's nothing wrong with it. I don't see anything wrong with it.
It's almost a trick question.
Yeah, I mean, well, no, I mean, I'm just
really,
going through my
what's wrong
list.
with it? Nothing.
There's nothing wrong with it. I don't know. I can't see anything really wrong with it.
I was scratching my head also, Roger.
There's just nothing wrong with it. I'm not trying to trick you guys. I'm just going through my watch list.
Yep.
Okay, what's wrong with this stock? This is a perfect example of a stock where there's really nothing wrong with it, but it's got a little bit of everything. It's got a little bit of chop. It's got a little bit of wicks. It doesn't trend. It's got a lot of choppiness. It's got a lot of wickiness. But I mean, is it like a horrible stock? Is it all over the place? No. It has a little bit of everything, and it's a little bit overextended. Yes. I wanted to get to that part last. So it's not really like, would I say it's like overly choppy? No. Is it overly wicky? No. It just has kind of a little bit of everything. It's just that kind of mousy looking stock that it doesn't look perfect, I guess, you know? Okay. Let's continue. What is this one? Oak Zim. Okay. What's wrong with this stock? It's all over the place, right? I mean, it's just all over the place. One good thing about it, it seems like it's respecting the 200 day, and it seems like it's getting a lot less choppier. But overall, man, this thing is just a mess. This is choppy. So when you see something like this, but this is just a mess. Okay, we're doing the short side first, Michael. All right, let's do the next one. Waste management. And by the way, I did not pre-screen these stocks for any of my qualities. I just wanted to go through my watch list, but I wanted to give you all the factors. Super, 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 super choppy. Naples fan. I'm not buying any of them. This is my short list, man. This is my short list. I don't buy stocks on my short list. Okay. Choppy as hell. You get this wrong, you're going to just end up being right here, and it's overextended. But more choppy than anything else. This is when you trade like this, you are asking yourself for trouble. Okay? All right, let's continue. Vist. All right. It doesn't look bad. I don't think this these are daily bars. Daily bars. This is not day trading. This is not first half hour closings. Let's stick to the topic. Thank you, Pat. Chop. Just a lot of chop. This is a grinder. Yes, exactly, Hefe. This is a grinder. Remember what I told you yesterday about grinders? Grinders are great for the 8-day moving average. It has a good trend. It has a nice trend. It's just a grinder. Grinders, you want to swing. You don't want to day trade them. And it's exactly what I said, Hefe. I mean, Hefe got exactly what I said. And Hal said the exact same thing. When you see a stock just kind of going down like this, but it's got the 8-day EMA, it's not a bad stock, but you have to be realistic with that stock. You have to not buy it on a breakdown. You got to get it near the 8-day EMA, and you probably will want it for a swing trade. Okay? But this is really important. I'm hoping that this is a little eye-opening for you guys. And, I don't know any other guru that teaches this unless they've stole it from me. But I've never, ever heard of a guru talk about the quality of a trend or a quality of a trend. But that's the most important thing in predicting what the stock will do next. Not the breakout level, the quality of the trend. Okay? Nobody talks about this. Buy T-Mobile, but they don't say, well, this stock is a lot less choppier, so you should have a lot less drawdown. They don't mention it. Why? I have no idea. Probably because they don't know themselves. So you can stay out of a lot of trouble by finding a quality stocks in how it moves. And how a stock moves is a thumbprint. Tim, I'm not going to spend time explaining to 500 people what a swing trade is. I have a perfectly good email, and it's roger@rogerscott.com. And you can also look that up on Google. I'd rather spend my time giving you information that you can't find anywhere else. Okay. Next one. If you want information that you can find anywhere else, you don't need me for that. I've already explained what the white volume bar, these are high volume bars. When volume goes X amount above the 50-day average, they turn white on me. Okay. Next one, SFM. This is another perfect example of a stock that's not really bad in any one spot. It just has a combination of all of those qualities. It's a little choppy. It's a little wicky. It's a little bit of a grinder, but it's not overextended. And no, I wouldn't mind trading something like this off the 8-day EMA, not a breakdown. The biggest mistake people make is they trade these stocks when they break down. All these stocks do is just revert back to their main trend. Yeah, it's a little choppy, a little wicky, a little this, little that. But again, it may be a 7. But all you got to do is trade it with don't trade these. That's the thing. Don't day trade these. Okay, you don't want to day trade this. Okay, but you want to swing these type of stocks. Okay, you want to day trade. HC. You want to day trade these type of stocks. As we did yesterday in the pit, by the way. We got in at 109, by the way, Raleigh, like 109 something.
Yeah.
And this morning. Yeah, so, not a lot of people caught it though. It was a really quick move. It was a bonus. It was just one of those things that I saw coming. All right, let's move to the long side. It'll make your job it'll make it easier for you. You guys could see things better from the long side for some reason. So again, is this a bad looking stock? No, it's got a clear, you can put this monitor across your room and you could see a 409. Thank you, Hal. That's exactly right. Thank you. You could see it right. You could see it right here. It's not bad, but it's not great. What's the problem? Well, it's a little gappy. It's a little wicky. It's got a lot of overlap. It's a grinder. It's a grinder. It's an A-line grinder actually right now. Not a bad looking stock at all, actually, but not great, not bad, just in between. And you can also see that it respects the 15-day pretty good, but not the 8. A grinder is a stock that's moving along in a slope like this, like 20 degrees or better, that just keeps grinding up the 8-day EMA. See how it's just moving up and down the 8-day EMA? That's a grinder.
And you get that sense of smoothness. I mean, you really do.
Yes.
After you start looking at these, you start to, your mind is starting to translate and understanding smoothness.
Yeah, and again, my theory, and again, see, I can't prove something to you, so I'm not going to say something that I can't prove. I'm going to tell you why I think it is instead of just saying it's fake. So I believe that institutional traders use anchored VWAPs on the 5-day lows, and the 8-day EMA simulates the 5-day MA. So I think, Raleigh, what they're doing is they're putting VWAPs at 5. I think they're using VWAPs on the lows, on the 5-day lows. I think that's what they're doing. Now, can I prove that? Do I have pictures of it? No. How certain am I that they're doing that? About 95%. But I don't have proof. So I'm going to say it's a theory. But other people just say things. TPR. Let's look at TPR. TPR is a great grinder. This is a grinder, but off the 50-day moving average. It's a grinder. This stock, by the way, look how it moves. You see this? That's a really high quality move right here. That's a very nice looking. This would be a 9.5, 10 right here.
Yeah, right there. Of course.
Right there. Right here. Right here. Right here. And we have to assume that the stock is going to continue moving the way it was moving. Basically, you should assume that whatever's happening is going to continue happening till you see otherwise.
Right.
That's
and in this case, Roger, we see that big gap that's there. And I know you talk about the fact that, what that did is that created a void. It created an opportunity for the prices to come back and fill the gap, provided that other things stayed the same. And that's exactly how it's responding.
Right. Right. See, if you buy the stock on a move like this, it's very easy to predict what it's going to do next. And right now, not a lot of stocks are doing this, but when they do, it's very easy to find really good stocks. Okay, let's continue. Where was I? Okay. Qualcomm. Ooh. Look at this. I mean, talk about choppiness, right? I mean, it's just a channel. We need for the stock to get above this channel.
Mm-hmm.
And I'll like it because it's been consolidating for a long time. And the longer something consolidates, the better it'll break out. Definitely not a day trade, but this is very choppy. This is like super, super choppy. No clear directional bias, no clear trend. This is like the opposite of what you want a day trade or short-term swing trade. Right here. Right here. This is the opposite. The opposite, okay? The opposite. Yeah, this is like whatever it's got, this has, okay? All right, let's continue. Let's continue. VSAT. Now, this is a pretty good trend right here. It's a pretty good trend. It looks like it's keying off the 8-day. Again, it's not bad. It's not Qualcomm. It's not this. Okay. This is about as bad as it gets. Okay. It's not that. It's pretty good. It's pretty good. I wouldn't throw this one out. Wouldn't throw this out. But it comes to the 8-day or the 15, bounces off, comes right back down, doesn't look bad at all. Doesn't look bad at all. Okay. Yeah, I'll talk about breakout, pullback or breakout. I'll talk about that in a minute. Next one, let's continue. NCLH. These are all stocks on my long list. Again, wiki, very wiki and a little gappy, but otherwise pretty clear trend, not too deviated from the 8-day EMA. Not too bad. Not too bad right here. Are you still in the position, Matt? I got to see what the Volt is doing. Volt's not doing anything. Yeah, Volt's not really doing much. Not bad. This is maybe an 8. This is not bad. This is pretty good. Yeah, I'm being picky. Like you can't, you know, take all price action into account. But aside from this doesn't look bad. It's a little choppy, but not bad. This may be a day trade. You can probably convince me to day trade this stock. Maybe. I mean, it's cheap, so probably not. Probably a swing trade. And it's not too deviated from the 8-day EMA. This is not stuck in a range, really. This is more of like a pullback. Right here. And we got a clarity right here. We got a couple. We're okay here. Okay, next, CRDO. Not a bad trend. Very nice trend. Again, 8.5. If you want to see what garbage looks like, that's this. This does not look like that. Okay, doesn't look bad. You got a little gap here. I mean, there's really nothing. I'm looking for things that are wrong with this stock. I mean, it's not the perfect stock, but it's very nice. There's nothing wrong with this stock. This is not, I could find a lot worse looking stocks than this. Now, again, you have a little bit of weakness, you got a little bit of choppiness, but overall, it's a very nice look. It's overextended. Yeah. That's the obvious thing here. It's overextended. I'm talking about the quality of the, you could see if it's overextended or not real quick. I wanted to kind of go over things that a lot of people miss. Very overextended. Very overextended. Let's continue. BE. BE. I like this stock, BE. How does the trend look on this stock? Not bad, right? I mean, it's got a little bit of chop here, but not non-directional chop, right? Not overextended. It's breaking out right here, not even 1 ATR above here. If it was up here, it would be overextended. To me, this still looks pretty good right here. Looks like it can continue going higher here. And even if it comes down, it's going to go from 54 to about $1.50. So there's not much there. The ATR is $3 on this stock. The low here is 54.20, and this is 52.50. So this is not even $2 here. Yeah, it's a nice growth stock. And again, it moves pretty well. I wouldn't day trade this stock. This is not a day trading stock unless I was given a gift. But overall, it's a nice looking trend. Is it an A plus? No, it's a solid B. This is a really good slope, but even if the slope is not this good, this is probably, let's see how good my geometry is. I would say this is about 35 degrees, maybe 38 degrees. Anything over 20% is good. 20% is this. Let me show you. Like this. That's okay. You don't want something like this. Like, this is okay.
Yeah.
This is okay.
You have to be careful with that too, Roger. I made this mistake early on in my trading career. It all also has to do with how you're looking at your charts. Because if you scrunch your time frames here, you're going to get a really extreme move. If you lengthen things out, it's going to flatten out. So, that 45 degree is all relative to what you're looking at.
Yeah, and again, I'm looking at, say, 3-4 months of daily charts.
Yeah, exactly. And that's a good point. You're looking at 3 to 4 months. If you're looking at 1 month, it's going to be a different slope.
All right. So again, you guys know I'm always looking at about 3 months, a couple of months, 3-4 months of daily charts. So nothing. This may be a little too much, but this is fine. If you're like you don't want to be like this, but as long as you're moving, you're okay. I like 20 degree slope. It's very, very, very good slope. Very, very good slope. Let's continue. Newmont, beautiful trend. I mean,
Mm-hmm.
very, very nice trend. Uh, not overextended. Notice how the slope starts out lower here and is now picking up steam. If it starts getting a little more parabolic, that's going to be a little too much.
Mm-hmm.
But so far, this is good, and it's not overextended. Here, I'll show you how I know it's not overextended. Here. Oh, actually, you know what? It is overextended. I'm wrong. It is overextended. It is overextended. I guess ATR is not very high here. Oh yeah, $1.74. Yeah. So we're getting a little overextended here.
Okay.
A little overextended. A little overextended is okay. A lot overextended is not okay. Let me just put that back to the SPY. Okay. All right. Let's continue. GLW. A little extended. Getting a little extended. But look at the trend. Look at the quality of this trend. How much back and forth do you have on this stock?
Very little. Yep.
Hardly any. Hardly any. I mean, look at this. If you get stuck, this is what you got to ask yourself. If you get stuck somewhere here, say you get stuck here, okay, 4 days you're back to normal. 5 days you're back to normal. See what happens? The stock bounces back. Doesn't have a lot of crazy wicks, not a lot of crazy price action. Very, very smooth. Look at how it bounces off the 15-day every time it touches this. It's nice, nice. This is nice. This is very nice. There's nothing wrong here, except it's just a hair overextended. Okay. Bill says if you're overextended, can you put on a sell call spread? It's a good question. Depends on the market, Bill. Depends on the market. How do you know if it's overextended? You want the price action. You want the stock to not be this much. iPhone, you use the ATR. You use the 10-day ATR. And you want to make sure that the stock is not overextended from the 8-day beyond the 10-day ATR. For every stock I post, I give you the ATR right here. You can just find it yourself right here. Right there. So let's see. 68.58. Yep, overextended. It's up more than $1. Just take this price right here, 68.65, and add $1.71 to it. That's it. Now you could do it mechanically too, like this. See, it draws the line for me automatically. So I don't have to even think about it.
Mm-hmm. There's your channel. Yep.
Yeah, which Matt promised to do on my TC2000, but he's been too busy lately. Okay, let's continue. This is a nice look. This is a very nice trend. Look how it does. It hardly has any pullbacks against you. You cheat by finding the best stocks. That's how you cheat. GLW. Fiber. A little choppy compared to GLW, right? You could see it right there. Fiber. See that? Not a bad trend. Not bad, but choppier. Can you see the difference between this and this? Of course you can. Maybe before today's session you couldn't, but now you can. Well, when you trade this, you're taking on more risk. Okay? Home Depot. Now, again, is anything really wrong with this stock? A little bit of everything. It's not overextended, but it's a little choppy, it's a little wicky, and it doesn't trend as well. But not like this. Not like that, okay? That's extreme. This is not. HD. Nice breakout. What's the first thing we notice about this stock? It's overextended, right? A little overextended, a little bit, just a hair, although it has support right here. So, yeah. Yes, it depends, Naples fan. Depends if I'm swing trading or day trading. If I'm swing trading, I don't even go to a shorter chart. I don't need a shorter chart. So do you see this? See this right here? Choppy here, but and again, I don't usually the way a stock looked last few weeks is going to be how it looked for the last year, but sometimes that's not the case. So in this case, you can kind of see kind of going back and forth. Would I not trade this stock? Yeah, I would trade the stock, but I would be hesitant about day trading this stock because it's got a lot of overlap and it's very wicky. But it's a pretty expensive stock, so yeah, I would definitely wait for a pullback. Definitely wait for a pullback. Just see something here. Sorry, folks, I'm just trying to follow the market here.
No, that's good.
I'm trying to do two things at once, sometimes three things at once.
And I know, Roger, you talked about the fact that pretty soon coming up, you're going to hold a special 2-hour class on drawing levels,
I am.
because that's something also that I'm sure. I mean, I know as I'm looking at this chart and I see something grinding higher, I start to wonder about resistance. Where might resistance be? And maybe the answer is don't worry about it. Everything else is moving smoothly. You're above the 8-day EMEA, you're above the American flag. It's all there.
Exactly. So it just depends. But I will do that, and I'm going to do a class on it. Maybe next week, maybe the week after. But I'll do a class on it.
That'd be great.
Yeah. This is a great looking chart. It's little overextended. This would be a perfect day for it right here. Yesterday, a little overextended. A little overextended. Look how well it supports this price level. It doesn't have much back and forth. So again, you look at something like this, right? Just put this on your wall. Put a picture of W and put a picture of Qualcomm to remind you the double levels. Now, Nathan asked me a good question. I think the question that Nathan asked me was, what? When do you use breakouts? When do you use pullbacks? That depends on the market. That largely depends on the market, Nathan. How much tailwind am I getting from the market? Is the market moving the same way on a daily chart? Is the market being choppy? Is the market just flailing around? Hold on a second. One second. I got to place an order in. One second. Okay. Sorry about that. Did anybody I just took a little profit on BE. We put it on earlier in the pit. Just want to see if anybody else got in on it a little bit. You love my multitasking. Okay, good. Steve did. Let's see. Robert did. Karen did. Sean did. Richard did. Fluffy did. Janet did. Joe did. Bollinger Bands don't work. That's why. If they worked, I would be using them. Okay, good. People made money. All right. Mazel tov. All right. Good. See, we learn and earn. All right. So to answer your question, Nathan, it would depend on what the market's doing. Is the market overextended? Is the market breaking out? Is the market giving me tailwind? Are other stocks in that sectors also moving? Am I day trading? Do I have volume? It's not just one thing. It's not just one thing. It's a combination of things. Folks, it's never just one thing. It's never just one thing. If it was just one thing, everybody would be doing it. It's a combination of 10 things, and at every different step, each of those 10 things has a different level of consideration. And with time, you learn to do that. Just like when you drive a car, you don't sit there and go, oh, now I'm going to slow down, turn my wheel to the left, signal the guy behind me, and in 300 feet, you don't do that. You're just driving. You know all these things. It's the same thing with trading. It's not one thing. It's not that one thing that all of you want it to be. It's just not. Okay. Yeah, so folks in the pit just made pretty good money, and they made money yesterday, and they made money the day before yesterday, and they made money before that, and they made the money before that as well. Wow, what a shocker. Okay, now I want to do a little class for you on this pattern. I want to show you this complete pattern. Now, I want to explain something to you, and I'm going to continue this topic. Today's Friday. I'll continue it on Sunday. I have a favorite pattern. And the way I teach people what I just taught you, so I found over the years that the best way to teach people how to use this approach is to use an indicator I call the A line. Okay, an A line.
Right.
The A line. The reason the A line is my favorite tool is because the way I teach people how to use it is exactly the process that I just went through with you. Okay? It's the exact same process. The process is no different. Okay? So when people come to me and they say, Roger, I'm a beginner. I don't have a lot of time. I don't have a lot of experience. I don't want to sit there and looking at charts. I have no idea what a good looking stock chart looks like. I don't know how to trade options. I say the best thing I could tell you is I have a program called the A-Line program. And this A-Line program is specifically designed to it works amazingly well, but most importantly, it helps you develop the best habits possible to become a trader. It really helps you develop the habits. You know how we were just looking at different charts, and I wanted to make sure it doesn't get off the rails. And I'm forcing you to. I'm limiting you to X amount of stuff. Okay, I'm limiting you to it. Okay, limiting you to it. Steve says it's my favorite program. So if you want to learn and you want to earn effectively, this is an amazing program. Okay, it's an amazing program, and I want to give you a class. I'm going to do. That's for. They don't even give me the right link. This is for Sunday, I guess. I guess today is not Sunday, but I'm going to do it today, and I'm going to do it on Sunday. I'm going to do it 2 times. Okay. I highly, highly, highly recommend you pay attention to this. This takes what I just taught you into another level. It's really, really good. It's very, very powerful. And if my children ever, Omar says it's my favorite too. See that? And if my children ever wanted to learn how to trade, this would be the program I would use. Aside from that, we've been absolutely killing it in this program. We took a huge winner on Google this week, and I think we took another one on GE. What do we make money on this week in A-Line?
I don't know, but you're 7 for 7 out of the last trades, Raj. And I
GE,
also just want to point out, this is something that you also taught to a lot of the newbies in the pub.
Yes,
that wanted to get involved, and you said this is the perfect starting point.
And that's exactly my point. The reason I'm so excited and the reason I wanted to do this today is because we have a lot of new people coming on board. And folks, a lot of you are like, well, I don't want to day trade. I don't want to trade stocks. I don't want to trade futures. I just want to live my life, swing trade, enjoy my life, and I want to start. I want to know if this is for me. This program is specifically designed for people who are. I didn't make it for people who are starting out. I made it for people who trade. So let me tell you. Adrian says I second the endorsement to A-Line. So I want to tell you how this program got started. You will find it very, very interesting. I don't think I've ever shared the story with you, Raleigh. So the way this program got started, bless you. The way this program got started is, I have a lot of different programs, right? And sometimes a stock doesn't fit the criteria on Clyde's and my mother's life. This is how this got started. This is why I want you to listen to this. This is an important story, and I want to really share this with you. And this is not part of a webinar. This is just me talking, okay? So, we have, dozens of programs, and sometimes I wouldn't be able to find a trade for that program just because either the stock market's not looking good, or let's say it's Monday and there's no Monday turnarounds for true trend for whatever reason, or pattern trader didn't hit back when we had it. The point is that, so what I would do is I would call this my multi-program. Basically what I would do is this: anytime, I've been doing this for as long as I've known you, Raleigh. Okay. Anytime a program, a specialty program didn't have a stock for me to trade, I would just find an A line and I would use it, and I would just say, this is a bonus trade.
Right.
Now, let me tell you why I did that. Your guys are going to laugh. I did that because I didn't think the program was sexy enough to sell. I was like, it's such a simple program. I mean, why would people want to buy it? It's so simple. But then as I matured into what I do, I realized it's not the complexity of the program, it's how well it works.
Yeah.
So, yeah. Look, I'm not a marketer. I'm a trader. So I was like, come on, why would people want to buy this? I'll just teach it to them. I mean, it's straightforward. So let me tell you what happened. So a few years, true story. So a few years ago, Matt's my bean counter. I said, hey, Matt, you know what? Why don't you do me a favor? Why don't we take all the bonus trades that we've given in various programs and calculate the number and see what it came up with? And we did that, and our jaws dropped. All right. iPad says you're the best marketer I know. I'm not a marketer. Raleigh will tell you I am not a marketer. I'm a trader, but here we are. So it's the funniest thing.
You've got a little marketing bone in you.
I've been doing this for many years now. I've been you hang out with Tucci and Graham for a while, right? You start getting, and T-Buzz, you start getting all this marketing talk. You should have seen me 8 years ago. I didn't even want to go live in front of a camera. I was so into my own little world. So, well, the reason it's a good story is because my stories are good. I don't tell you bad stories. So I looked at my results, and Matt and I were like, our bonus trades are better than our like program trades. Like we had like 90, it was, I don't remember the number, but it was like 85% winners, 3 profit factor, and these were my bonus trades. So I was like, okay, Matt, we need to launch this. And and then we launched the program. You know what happened when we launched the program? I think we had like 25 winners in a row without a loss. So folks, this program I did not sit there and say, I need to come up with a new program. This is something that like begged to come out of me for many, many years. This was the most natural program, this is the way I trade. This is like how the pit, that's how I day trade. This is how I swing trade.